Hello, this is Ahura. Good morning in Europe, good evening in the United States. This is Ahura with another daily outlook videos. As you know, in these videos, we are going to see what's happened in the market yesterday, what is going on right now, and what we have to expect from today's financial market. Yesterday, as you know, it was a very heavy day with the FOMC meeting in the center of the stage and so many other economic data. First of all, about the FOMC, about the Federal Reserve, as you know, they didn't have a surprise. As long as it's not a surprise, it's a positive news. That's what they say. So Federal Reserve, as widely was expected, didn't change the interest rate, and they didn't mention about when they are going to rate the hikes the rates. Sorry, when they are going to hike the rates. So we have to wait for meeting minute to have more detail and more information next 2 weeks. However, already we knew that Federal Reserve will start tapering with 15 billion US dollar per week, and it will be continued at the same systems, the same plan till mid of 2022 to end totally this plan, this asset purchasing plan by mid of 2022. And probably, most probably, with what happened, there are several very important points that Mr. Paulo mentioned. So, as we, just before going to the Mr. Paulo's press conference, I need to mention, I need to tell again that the Federal Reserve FOMC announcement had really nothing than to be expected before earlier. So all what happened, whatever we saw and whatever we read in the announcement, just if you could change the date, it was exactly same as what you had and what we had a month ago in after September meeting. So the meeting had no surprise. At the same time, about the but when we are coming when it's about the Mr. Paul's press conference, just the press conference had some points to talk about that when the Mr. Paul was answering the questions, and also the outlook of Federal Reserve about the inflation. The outlook of Federal Reserve about the inflation changed from transitory to it's expected to be transitory. And for the employment, for the full employment rates, Mr. Powell said that we have to wait and see the situation and how the economic is going on. Still, COVID-19 is playing the main role, and so many people still they are not looking after jobs. So it means that they are not counting in our our unemployment system, our employment rate system of country. We are in the unemployment rate. We are always talking about the active seeking job people. When they are the people that they're not seeking after the job, they're not looking after the job, they are not counting on the unemployment level, and we have too many of them. Some of them are already retired because they made a good money during the pandemic in the stock market and in cryptocurrencies, so they retired themselves. And so many people, they are skilled, they have enough money for now to live, and they don't want to go back still while the vaccination level is less than 70%, and they are kind of taking it as a guarantee for themselves, and so for now they're not looking after a job. That was the reason of another time to Federal Reserve to talk about the shortage in employment, and Mr. Powell about the inflation told that we will solve the inflation while when we can solve the employment shortage, because the employment shortage besides the raw material shortage, they are the reason of the increasing the inflation at the moment. So inflation will be solved since we can solve the labor market issues. This is the general, like kind of in general what's happening in the market. And now about the, as you see, just let's go here. Let me, before going to the chart, or also I can tell at the same time with the chart. You see here, this is the week's chart. VIX seems that it's not like sharply decreased because we didn't have anything specific, and as I told them, there was nothing more, other than we were expecting. So that's why the market risk is decreased, and so the market risk is still decreasing after that, and we don't have any till actually the Friday's NFP numbers also, since it cannot change anything in the current policy of the Federal Reserve, is not going to be that much important and effective in the market, because we already know what the Federal Reserve is decided. So this Friday's NFP numbers will not play that much big roles. Maybe in a short term, right after the news, they change something, they move the market, but it's not going to change the directions. So for now, the market risk is low, and actually we have to wait to US market to open and see what investors are going to react, how the investors are going to react to the market. At the same time, if you check the US dollar chart, you can see before NFP meeting, US dollar was increasing. The reason of this increase, if you go to the economic data, you can see that yesterday we had very positive economic data in the market. Not just in the US, we had all across the board in the leading economies. In China, we had stocks in manufacturing PMI much better than expected at 53.8. We had New Zealand unemployment rate fell under 3%, fell under 4% to 3 point something. Let me check. Let me check the number, because I don't want to just tell the numbers there. Tell the exact number what happened. Unemployment rate in New Zealand fell to 3.4%, lower than 4% of previous month in September. Previous month, and for the quarter three, for the third quarter, unemployment rate was generally 3.4%, less than 4% of second quarter. And then, as I told, we had stocks and service PMI. Sorry, I think I told manufacturing. It was a service PMI, stocks and service PMI in China in October. Increased to 53.8 from 53.4 of September. And then later in the UK, we had unemployment level in Spain. The employment in Spain also was fine before going to start talking about the PMI service and composite purchasing manager index in the UK, which both they could beat the expectations. And later in the US, we could see the ADP non-farm payroll increased 571. This is the highest level since June, and almost 25% more than 400,000 of market estimates. Even if in the last month the relation between the ADP and NFP is gone, but still ADP is important and market still taking care about that. And then the market composite, and then ISM, the market composite and service PMI, and same as the ISM non-manufacturing PMI, both were much higher than expectations and much higher than the months earlier. So, and factory orders also in the US increased by 0.2% in September. So all the numbers, they're telling that the economy is going well, economy is doing amazing. That was the reason to see US dollar to increase before FOMC meeting, to increase this more than above 94 level. And right after the FOMC meeting, what happened in the market? Since there was not surprise, and as long as there is no surprise, it's a positive and dovish news for market, as we talked yesterday, it was talked 20 days ago, last days. So the dovish tone of FOMC sent FOMC announcement caused the US dollar to fall, and that was the reason. So after the correction of the last night, over the night after the meeting, now it seems that the US dollar for now, for time being at least, is changing the direction and can fall a little bit. From the technical point of view, also you can see the new higher high was lower, so it means that we had a lower high, and it means that so from the technical point of view also, if the market, if the US dollar index can bridge the we can say 93.75, and even a little bit higher, this much 93.80, 90.93.80, 75 or 80 was the it is at the K level at this here is the K level. So if the US dollar index can bridge this level lower, we can see lower levels. But however, based on the current situation, market situation, US dollar can decrease a little bit. And at the same time, for the US dollar, for the gold, sorry, for the gold, gold also, since the US market, financial market, in the stock markets, they're amazing, doing amazing. We can see a little bit weakness in the US in a gold chart as well, because with the dovish policies, we will not need that much demand. We will not see that much demand in the gold market. You know, last night after let me before going to check the charts about the in the last night, I have to mention that the US dollar, US 10 years bond yields last night at the close fell under to under 1.8 to 1.60, but however it's still 1.60, 1.598, almost 1.60. 1.60 is still so high. So the higher 10 years bond yields will not let will not let the gold to increase more, even if the US dollar going to be fall. But still, with the weaker US dollar, still expecting to see the gold in a higher level, it will be a little bit not realistic. Why I'm telling that? Why I'm telling that, because S&P 500, also you can see the S&P 500 and other US dollar indexes, all of them, they're increasing, and you can see all of them in all of them, you can see all of them in higher levels, and all of them you can see in an all-time high. US dollar index, this is the Dow Jones and Nasdaq, all of them they printed, and this is the Nasdaq, all of them they are printing, and they printed new level, new higher highs, new level highs. But because why? Because the tone that last night we got from the FOMC was positive. So it means that still for the next month, still we can see increasement. Last week we were talking about that financial market after, you know, for let's say, for example, the Dow Jones, as we were expecting the Dow Jones to ease before FOMC, and after FOMC we will make a decision. So it is up before FOMC a little bit, and it was waiting for FOMC meetings, and after FOMC meetings now we can see the increase in a market, and again the market started to cover its losses, and I mean its losses of the last day, not just like just a little bit, like 0.2% of loss before the meeting. But however, the market right now is focusing on the dovish tone of the FOMC meeting, and much better than expected earnings reports. So it means that for now, still we are waiting to see the stock markets and indices in a higher level. So this bullish can continue from the technical and fundamental point of view. From both point of view, it will be increased. About the US crude oil, as we talked earlier, US crude oil, if the inventory levels for the, as we saw, the inventory levels of API, American Petroleum Institute, and EIA, both of them, they showed that inventory levels in a week ended in October 29, both of them they increased by more than 3 million barrels. So that caused the decrease, that caused this kind of, I can call it a kind of the correction in the oil price. But since the market is doing amazing, and we still have this shortage, and we have this shortage in the market. So it means that for now, still we have to wait for recovery in the oil market, and we'll see them to recover higher to the higher levels. So oil is still positive. In the long term, we can see that still, if we go to the daily chart, we can see despite the correction that we saw in the last days, and one of the reasons was the higher than expected inventory levels in the last weeks. So still we can see the oil in a higher, in general uptrend, and especially from the fundamental point of view, oil can increase more and we can see we will be waiting to see the oil again above 88 and 180 above $83 in next 2-3 days. This is the general about the markets. About the cryptocurrencies did it with Mr. Powell and totally the Federal Reserve. They didn't mention anything specific about this cryptocurrencies. So the cryptocurrency situation is the same as before. Above 62K still can be the bullish, but breaching under the 62K for the Bitcoin can be bearish for the cryptocurrencies. The cryptocurrencies market will be affected next days with the news about stable coins and stuff like that. This is the general what happened in the market. Hope it was useful for you. See you guys again tomorrow morning. Bye.